Hello traders and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, November 1st. And I'm Michael Boutros. Good to be with you guys this morning. Eileen, Michael, Conwall, Henry, Medad, Mark. Great to be with you guys here in the room today. So before we get started, I just want to do a quick note, guys. I'm on a new system here, so I don't have access to the Bloomberg terminal with me right now. I'm just setting things up here on this new setup, so bear with me. Does anyone know here in the room how to get rid of these watermarks on the charts? If you do, for TradingView, let me know. I kind of forgot how to do it, so that might be a little bit of a distraction throughout the session, but drop me a note if you know how to get rid of those watermarks. Anyway, to get started with the session, guys, we had RBA on tap last night, the BOJ coming out and pushing out their target inflation targeting, expectations to a bit further out. You saw some moves on the yen crosses. So we'll go over those. We'll go over Aussie Dollar, Aussie Yen, Euro Yen. I do want to touch base on Kiwi Dollar and Kiwi Yen. And then obviously we'll go over the majors with the Euro Dollar as well. Conwall, if you're in the room, definitely we'll take a look at, you want to look at crude and silver, looks like. Sure. Okay. All right. Obviously, still a huge week of event risk coming up, right, guys? So keep the powder dry as we head into tomorrow. The two-day Fed meeting starts today. We do get the release of the policy statement tomorrow. No changes expected from the Federal Reserve. Certainly, the expectations continue to surmount for that December hike. And then we have still Super Thursday with the BOE interest rate decision as well as the quarterly inflation report. Still kind of hesitant to get involved in any of the sterling crosses, but if you guys have any questions, do feel free to post them on the message board. All right, let's jump right in. So here's what the dollar index looks like heading into the U.S. Open. This is the Dow Jones FXCM dollar index. Just wanted to note that that same slope support that we were talking about coming into play right here off of the resistance reversal that we made last week. So again, getting that pullback in the dollar that we expected. You're seeing a similar performance in the ICE dollar index as well. Still got a bit further to go before you run to slope support there, but major support doesn't come in until 97.57. Okay, that is the high that you made back here in July, and that coincides very nicely with a sliding parallel here off the lows from that swing low on April, was that 21st. By the way, what happened with the FXCM dollar index on dailyfx.com instead of DXY? Links are no longer work for FXCM. So the FXCM dollar index, the Dow Jones FXCM dollar index, is an FXCM product, Eileen, due to the sale of DailyFX to IG. I don't think we'll be working too much with that index. You might not see it highlighted on DailyFX anymore. For our purposes here, guys, we're about the analysis and trading, so I don't really care what the instrument is. I'm going to point it out if there's relevance in the trading that we're doing. So, you know, all marketing aside and brokerages aside, Eileen, for our purposes, we're just, you know, studying what the market's doing. So I don't want you to worry too much about that. Yeah, you're more than welcome. As you can see, as we've been following for the last couple weeks, the Dow Jones FXCM dollar index actually has been a little bit cleaner technically as far as where the resistance barrier was last week. That being said, both more or less showing signs of near-term exhaustion. Note the momentum trigger here on the ICE dollar index coming into view here today. So keep your eye on that, but it does look like you see a little bit more of an exhaustion sign here on both dollar indices. Okay, so we got the Fed meeting on tap tomorrow. We do get non-farm payrolls on tap on Friday. It's going to be a big week still for the dollar heading into the start of November trade. Okay, so US dollar index and DXY number 1 and 2. All right, let's jump right into yesterday's update. I do want to go over some of the Aussie crosses. Obviously, on the back of the RBA interest rate decision, not much happened on that front. Here's what the intraday charts look like yesterday. So, for the Aussie, we wanted to stay constructive in the pair. Basically, the broader bullish invalidation was way down here at 75.11. But to start off the week, the focus was higher above 75.50. So as we noted yesterday, guys, and if you click on the link below, you can always see the previous update heading into the start of this week. Actually, if we go back real quick, heading into the close of last week, we were looking for exhaustion near 75.50. Here's what Aussie dollar looks like right now. All right, 75.50, 75.60 was defined by the 764 retracement. You had the 100-day moving average. You had the lower or the median line for the descending structure all lined up right there. Okay, so heading into the close of last week, we were saying, well, we're looking for exhaustion either here or down here into 75.11. And again, that's the broader key technical support for Aussie dollar for the broader formation we've been following for the entire year. It's way down here. So obviously, we came into Friday right into that 75.50, 75.60 level. We talked about this yesterday in the webinar. We got the sort of rebound and opened up the week just below the 75% line here for the current descending formation. So this is the 1-hour chart. Heading into the RBA last night, obviously the focus was to see if we can get a break above that 75% line or the 50 line of the upper quadrant here, whatever you want to call it. You're looking for targets up at 76.50 and key resistance up at 76.76 into 76.80. That's what we're testing right now. Okay, 76.76 and 76.80. That's really the major key area of resistance, and a breach through this, specifically on a close basis, would certainly, in my mind, start to mark a little bit more of a breakout type of scenario. Keep your eye on that daily chart, guys, and what we've been consolidating under for the last 3 months. So if we clear this formation here, you are still looking at 77 as near-term resistance and 77.50, but certainly this break would be the onset, in my mind, of a little bit more of a type of breakout scenario here for the Aussie dollar. So immediate risk heading into the U.S. session, Mike. What are we looking at? Well, I think the long bias is at risk immediately heading into the U.S. session. You look for that pullback to stay constructive. I do want to really see us get through this before getting aggressive on any long exposure. Any long exposure that you had on the RBA last night, you kind of want to be wrapping it up here. Okay, taking some off the table, bringing your stops at least to break even or better. But I am expecting some possible pullback here into the start of U.S. trade. Want to stay constructive, basically above the weekly open now. So we're going to go ahead and lift up that near-term support and near-term bullish invalidation to right here at 76. That's your weekly and monthly, that is your monthly open. The weekly open comes in just lower. All right, so you're testing channel, the upper median line parallel, resistance rather. Nice resistance region here at 77, 76, 76, 76, 80. Possible pullback off this region here for the Aus. Any questions on Aussie dollar? Pretty darn clean. Again, as a disclaimer, I actually didn't get an opportunity to get on the long side. I was hoping that the RBA interest rate decision would charge a spike lower near 75.60, which is what I noted last night as an area of which we could look for the long position targeting that 76.70 area. You didn't get it. Kind of just exploded right to the upside. So, we'll be looking to see if we can't get re-entry on this one. But near term, you're checking resistance right now. Hey, Adam, great to see you in the room, man. Morning. Any questions on Aussie? All right. And again, if anyone in the room, I'm going to figure this out tonight as I did earlier, but if anyone in the room knows how to get rid of these watermarks on the chart, give me a quick note because I know it makes the chart harder to see here. Okay. Aha, got it. Okay, much better. There you go. Yep, I got it, Mike. Thanks for that. Yeah, that was driving me crazy. All right, so you got a clearer picture here of the charts, guys. Feel free to take a snapshot if you do need to. Looking at resistance for Aussie dollar right about here. Um, if there are other questions on Aussie dollar, I do want to jump a quick segue into Aussie yen. Here's what Aussie yen looks like. That's number 4. Here's Aussie yen. So, a little bit more of a contentious break. Here's what we look like on Aussie yen yesterday. And the thing is, I've been talking about this trade with some of the guys here on the desk for quite some time. And let me take a step back. Here's what Aussie yen looks like on the daily chart, okay? And the major premise of the trade here, heading into the start of the week, and what we talked about last week, was the fact that this 80.36 into structural resistance, pretty damn big, okay? We reversed right at the 618 extension from the advance off the lows that you made in July last week. Again, you pulled right back. We noted yesterday that we were coming into a sliding parallel extending off that swing low for the month that we made back on the 11th of October. Caught that low, which coincided dead on with the highs from September. So a nice little support bounce there. On the rally here, this is huge now, okay? And I know it looks like on the near-term chart, looks a little different on the slope, like we may have broken already. Let me bring this into a 4-hour here and see what we're looking at. And here's what it looks like on the daily. Okay, looks like I made a slight adjustment here for the daily, but long story short, guys, what I wanted to highlight is this. You're coming into that 618 extension. You're trying to breach through that right now. Just above, you have the upper parallel, or basically channel resistance. And then again, that long-standing upper median line parallel. If we clear this and it looks like we're closing here, or we're trying to push through on momentum, this would be a validated breakout if we close above that region, okay? And that would really start to target, you're essentially looking for the highs they made both for June and July here. That's like 81.51. Near term, I do worry about exhaustion. Okay, note that momentum hasn't been able to clear 60 or 70 here on the 120-minute chart. You can see that the highs that we made from last week are still marking divergence with this new high. So I'm a little bit cautious about getting too aggressive here on the Aussie yen breakout. That being said, look for near-term resistance at 80.88. That is basically an 88.6 retracement of the decline off those highs from July. And obviously, basic channel resistance for the current operative slope off the low also converges right on that region. So even for Aussie yen, you saw the yen really start to lose some weakness, and dollar yen also seeing a little rally in overnight trade here on that weakness that you saw on the BOJ with that pushing out the targeting the inflation target. But the long story of it is for Aussie yen, I'm very wary of chasing this any higher, guys, and I do still think you run the risk of a more mean reversion type of pullback here for Aussie yen. So I wouldn't say there's any change to any of the levels that we were talking about yesterday, guys, but certainly near term, looks like you're fizzling out here near structural resistance. Let me adjust this for you one sec, guys. Bear with me one sec. I do want to just take that slope and really get the exact levels for you. Okay, so that's marking breakout straight up on that front. A basic trendline resistance you see here in red is a little bit different of a slope. That's what comes in here. I have that labeled as the 2014 trend line. That's what coincides basically on channel resistance and that 88.6, around 80, 88, 80, 81. Nice little 10 pip range there. So again, here's what it looks like in the 2-hour. And let me adjust the daily chart for you as well. Okay, And the daily chart does now show a little bit more of a prominent breakout to the upside. And there's that 88.6. All right, key support is still going to be at the weekly opening range low. That coincides very nicely with basic channel support off the lows that we made from the 27th of September. So keep that in mind as far as what basic support is here, but coming in some structural resistance for Aussie Yen. Any questions on Aussie Yen? Right, basically into 81. Should be looking for some more near-term resistance here on the way up. All right, that is number 5. I do want to take a look. I'm sorry, that was number 4. I do want to take a look at some of the other Aussie crosses. I see some questions here on Aussie CAD. Where are you looking for long entries again in Aussie Yen? So for Aussie Yen, for me to get interested in long entries here again, Eileen, well, let's say this. I'm not really interested in long entries anymore. You know what I mean? For me right now, Eileen, I'd be looking for exhaustion heading into the U.S. Open near 80.88 for a possible short scalp. That would be half or a quarter leverage. Guys, it's important to note, I forgot to say early in the session, it's still the first day of November trade. So personally, on my end, all my trades have been 1/4 X. So if your standard trade size is X, whatever that is, if it's 10 lots, 5 lots, 20 lots, I don't care. I've been taking a quarter of my standard trade size per scalp. Why? You're still working with very difficult trading conditions. There's a lot of event risk on tap. It's the open of the month, and certainly these are not the best times for us to be getting aggressive on intraday trades. That being said, I am looking for possible resistance into that 81 handle. Eileen, for an exhaustion trade, might be a decent pullback. On that pullback, I'd just be looking to target 80.36, 80.32, which is the key level that we talked about last week. Getting long, if we get a pullback into the 80 handle, might be looking for some long triggers, but ideally you get back to channel support to get it to be able to try to get a long position, back into that 2014 trend line. So right now I'm not looking for longs at multi-month highs, right? I'm actually looking for a little bit more of an exhaustion trade to try to play a short scalp. And again, if the pullback finds support at former resistance, specifically if it's along that trend line or the median line formation we've been following from 2014 here in blue, keep in mind that the 200-day moving average comes in right around 80.09 as well. So either way you look at it, Eileen, near-term support, you know what I mean? Near-term resistance, bullish invalidation. I'm still going to keep open with the weekly opening range lows, basically at like 79.13. Make sense? Yeah, that's what I'd be looking for here, Eileen, the exhaustion trade near term. And then if we get the setback, somewhere around the range of former resistance, the 200-day moving average, the initial weekly opening range high, anywhere here would be the first area I'd start to look for some more meaningful support here on Aussie Yen. All right. You're more than welcome. Cheers. Okay. So that was number 4. Let's do, I see a question here on Aussie CAD. Was that Nicholas? I have a question on Aussie CAD. Would be interested to know your sentiment. Sure. So Aussie CAD is actually something, we were following Euro CAD. I haven't really been following Aussie CAD. Bear with me. I'll do Aussie CAD for you here early in the session. This is number 5. I'm going off the fly here, Nick. I haven't really been following this trade, so just bear with me, okay? Let's take a quick look here. Here's your October open. Okay. Okay, so there's some interesting stuff going on here for Aussie CAD. All right, I don't have time to put together a scalp chart for you per se. I'll take a look at this for you tonight, but some things that's kind of just jumping out at me right now. So near term, very similar to what we were just talking about with the Aussie Yen, I do think you're running the risk for some near-term exhaustion. Check out the momentum signature just off the last couple of highs that we've made. A higher high in price, a higher high in price, a higher high in price, a series of lower highs as it stands right now. Now, obviously, this could pan out to be some sort of resistance trigger, which ends up breaking higher. But as it stands, I do want to highlight, this series of lower highs could be suggestive that you're seeing momentum start to fizzle out. That being said, I don't really have any major key structural resistance until like 103.43. That's 100% extension from the ascent off the lows that we made basically last year in September. And let me just see what this looks like. Yeah, so I don't really have a strong, clear-cut opinion on this, Nick. What I would say is this, man. You want to stay constructive above the 2016 open. That takes you into 10060. You can see former trendline resistance there off the highs that you made from 2014. That's the 2016 open. Obviously, you have trendline support and last month's open also in that little nestled region. So I'd want to stay constructive, broadly speaking, while above that region. Near-term resistance, like I said, 103.42. Just above that, you have this trend line, which is just a parallel off the lows. So sort of areas of interest for near-term exhaustion or key resistance for the pair. But I think on this one, you'd want to stay constructive while above that 2016 open at 10060. Could you kindly run through Aussie Dollar again, please? I just joined. Obina, if we have time, I'll take another look at Aussie. It was the first one that we covered, but I do want to get through some of these pairs, so bear with me real quick, and I'm sure we'll get back to it. Nick, does that make sense on Aussie CAD? I'll take a closer look for you on intraday price action, but as it stands like right now, it's kind of at risk for a little bit of a pullback here. Yeah, wouldn't necessarily look to get aggressive on the long from here, but certainly constructive above 10060 is the way I would take it. Looking for a stretch into 103.40, 104. Does that help? He says, yep, thanks. You're more than welcome, man. Again, I'll take a closer look at this. Interesting pair, Nick. You've been following this one for a while? Interesting pair. I kind of fell out of love with Aussie CAD. If you guys remember, we actually did have a decent play on it earlier in the year, specifically here in August as it was coming into the 2016 Open. We posted that massive outside day. That was a nice opportunity to play the short back in the 200-day moving average. Since then, it's kind of been a chop fest. You got that rip higher in late September. All of October has kind of fell off the radar for me, but might be a nice option here as we head into the November Open. Okay, so that was Aussie CAD, number 5. I do want to take a quick segue back and get into Kiwi Dollar. That's number 6. We'll get through Kiwi, and then I'll jump into all your questions, guys. So from last night's update, here's what Kiwi Dollar looked like. And certainly, it's been a very tight range since the start of the week for the Kiwi. It's been a lackluster trade also. I wish I got a little bit more volatility on this, but you're seeing that move to the upside may offer us a nice opportunity to get back short near 72.14, 72.18. Key resistance here for Kiwi Dollar near term. So I bring your attention to the daily chart. This is what we've been following for the last few weeks here on SB. You guys all remember this, right? We got a really clean reversal here last week as we came into that nestled region. We're heading into that again. Invalidation for the bearish side is still 72.18, 72.14. You have 50% retracement, 618 extension, the upper median line parallel, current operative former slope support, now resistance, all in that region. Okay. Now momentum looks like it's showing a trigger as well. If we close above 72.18 and momentum closes above this trigger line, that in my mind would be a breakout play, targeting basically last month's open and the high day close at 73, just below 73. All things held constant, the long side's at risk heading into 72.18. Here's what it looks like on the near-term chart. Okay, this is the 2-hour. So you can see, from yesterday, we're basically looking on that slow muddle higher. See if we can find some resistance at 72.18, 72.14, looking for some short triggers up there. Downside, you're really looking for a stretch back into slope support. Key supports at 70.50. Immediate risk is still for a push higher into the 72.18, 72.14 level. Again, I see some new names in the room here, guys. If you, just a quick reminder for anyone who is new to the room, if you'd like to take a snapshot of any of the charts that you see presented in the webinar, go ahead and click on that camera button, the top right-hand corner of your GoToWebinar screen. That way, if you need to reference these charts throughout the course of the day, you have them available to you. All right, so that is Kiwi Dollar, and that was number 6. Okay, I want to jump into your questions here. I see a lot of questions crossing the board, guys, so I want to get to as many as possible. Does the camera work for Apple users? Mike, I never experienced any issues. No one's ever given me or told me they've had an issue with that, so I think it should, Mike. I don't think it shouldn't make any difference. Typically, the picture saves in your... Is there no button there, Graham? There's no camera for the Apple? Apologize for that. Okay, so yeah, so I guess for the Apple computer, wow, that's something I didn't know. Thanks for bringing that to my attention. You can still use the screenshot, I guess, for the OS, but just wanted to bring that up. Yep, no worries, Mike. Graham, thanks for answering that question for me, man. I appreciate it. Okay, so let's jump into your questions here, guys. First things first, euro dollar. Here's what the euro looks like on a 30-minute or on the 2-hour chart. Bring your attention again to the daily chart for the euro. Look, once we cleared 109.36, that was the bearish invalidation level. We talked about that here last week. That cleared here on Friday. Yesterday's pullback finding support right at former resistance, 109.36, 109.30, before mounting this last assault here. Remember, key resistance, as we noted yesterday, 110.46 into 110.66. We're just below that right now. You're looking at the swing lows from August. You're looking at a broader dated 50% retracement of the advance off of the December low. And you're looking at the 50 line, or the 75% line rather, of the declining or the descending median line formation we've been in. So for euro, still looking a little bit higher near term. I do think you're looking at resistance just forthcoming here. This is a sliding parallel or a basic channel resistance for a slope that worked pretty well for longer than I thought it would. Few weeks here. Really nice touches. There's that support bounce yesterday, heading at some resistance forthcoming into the U.S. Open right around 110.46. 110.48, 110.66 here. I'd be looking for some exhaustion on the long side up there, guys, especially with momentum starting to get into overbought territory here. The long side is at risk sub 1066. For the euro dollar targets, by the way, that was highlighted in the previous day's scalp report. Guys, you can always just click on the intraday charts. All the pairs are listed for you right there. Here's what euro dollar looked like earlier in the week. Okay. Excuse me, this is Thursdays. So you can see we wanted to stay constructive above the 2016 open. Bullish invalidation was 109.85, looking for 109.72, and we're stretching right into this region here at this point. So look for some near-term exhaustion here on the euro heading into the open. All right, that's number 7. I see questions here for euro yen. So here's what the euro yen looks like. Who is euro yen for? Michael Schneider. Here's euro yen, man. So coming at some nice resistance as we speak. Where was the last update on euro yen? Here it was, back on the 30th. Here's a Sunday update on euro yen. So we want to stay constructive above 114.19, 114.29. Topside resistance of more significant importance is basically what we're testing right now. Now we're sitting on top of it. It was 115.50 as a 786 retracement from the decline off the highs, but you're also looking at a basic trendline resistance dating off the high that you made in July, specifically July 20th here. So you're testing that region right now. Look, for Euro Yen, the daily chart is really what the tell is here. Okay, to put things in perspective, our first initial target after playing the reversal last week here was this region here, 100-day moving average, 2016 trendline resistance dating back to those, dating back to those January highs in red. Okay, we broke that. Secondary target that we talked about was this trend line for the broader consolidation that we've been in off of the July lows. Lower high, lower high, lower high, higher low, consolidation. If this is legit the break, okay, we would need to see a close above 116. Okay, not only is that basically going to take you through the high day close from October, but it's also going to validate, in my mind, the break of this near-term formation. So I think there's big implications here for Euro Yen if it does pop through. Again, put a gun to my head. I think that you possibly see a false break scenario here, a little bit of a recovery lower, but you look to stay constructive basically while above former trendline resistance, now support. So while above this region now, you still basically want to stay constructive in Euro Yen. Here's what it looks like on the near-term chart. Okay. Let's go ahead and clean this up a little bit. And again, there's that key 618 retracement, 116. You also have the median line to deal with from up here. So a little bit higher, very similar to what we're looking at with Euro Dollar, very similar to what we're looking at on other Euro crosses as well, Euro CAD, right? You could see a scenario, Mike, where this thing travels a little higher, then starts to offset and give us some recovery. Yeah, so that's what I'm thinking here for Euro Yen. I'm thinking look for a stretch higher into the open for that setback to be able to give us an opportunity. To play the long side here, I would need a setback into that key support. More so, I'd be looking for exhaustion as you get closer to 116 on this stretch in Euro Yen. Where would you sell it into? So 116 is kind of the stretch I'd still be looking, Mike. I still think you can get up into 116. Makes sense? He says got it. Because remember, EuroCAD looks like it's got some more room possibly, right? Euro Yen, very similar to that 116. Euro Dollar, right? A little bit more room on a possible stretch higher. So that's kind of where I'm thinking with the Euro crosses heading into the U.S. session here. All right. And we got EuroCAD. Let me jump into some of the commodities here. Kiwi Yen. Mike, did I get that? I'm a little off beat here, guys. Sorry about the new computers got me all thrown off. Not yet. Okay, let's get through Kiwi Yen, and then I got you, Conwall, on the commodities. No worries, brother. So Kiwi Yen, the only thing I do want to note is that key resistance, we're pushing through it, okay? And at the end of the day, I'm not touching this at all today. Today's close is going to be paramount. If you guys recall, we talked about this yesterday. For me, 75.25 is sort of still the line in the sand, and I wanted to look lower below that. Now that we're breaking above it on some continued yen weakness, and I guess alongside some Kiwi strength, you know, you still have resistance right here at the September high day close. You're checking a resistance trend line here that dates back to the highs that we made for July. So I don't really want to mess with this right now. And again, I know I'm a little hesitant in some of these trades, guys, but it's important to note where we are in time. It's the start of the month. It's not our best ideal trading conditions for intraday positioning. So instead of trying to call a cap, trying to call a high on these trades, I just want to know the levels, and I want to see how price action reacts heading into the open here. So near-term resistance, 75.52. If that breaks, you got a clear, smooth cut sailing, I think, to 76 on the upside. with key support now at the monthly open, which coincides with the 50 line or the 25% line of this ascending median line formation. All right, so the levels are pretty clear. Again, look for that stretch in 75.52, maybe an exhaustion play, but broadly speaking, as long as you're above 75, you know, the potential of this being a more meaningful breakout is there. Okay, it is there. Schneider says, perfect. Thank you. You're more than welcome, Mike. More than welcome. Use caution sub 75.52 on the long side, but if you get through that, I think you're in good shape. All right, moving right along. Mr. Conwell, haven't forgotten all about you, buddy. Here we go. Let's go through the commodities. So here's what crude looks like. I know you've been tearing this one up. We made it into the 47.30 target yesterday. That was right here. Now that we've broken below it, you know, it looks like you could see finally that move into structural support that we've been talking about at 46.22. It's a key 618 retracement from the advance off the lows that you made back in September, but also it represents the lower median line parallel for the current operative slope we've been following here in crude. So if you take a modified Schiff pitchfork formation here, you can see that the median line caught the highs, the lower parallel caught the lows. That same lower parallel converges on the 618 of the advance and the 100-day moving average, right nestled in this region right here. All right, so look for some immediate resistance into 47.30, back where we found support. Also keep into account that swing high from last month. Okay, in fact, I'd probably highlight this at this point as near-term resistance. Okay, and key support near term 46.22 on the downside is the lower bounds of that ascending formation. So look for some near-term support coming up here in crude. Okay, Conwell, I do think you can travel a little bit lower, like I said, into this region of structural support, confluence support, whatever you want to call it. Momentum is at 40, again, coming at some near-term support. Here's the last couple of times momentum came into 40. So just use that, keep that in mind. If you're getting aggressive or you're still holding shorts, that's sort of my limited barrier. Looking at this on a near term, let's see what it looks like from what we've been following. So again, there's that structural support, 46.22, 46.34. Oh, wow. Guess what else is down here, Conwell? That's pretty cool. So remember, we were talking about the consolidation formations, and typically these consolidation formations, although this was a very ugly one, you take a measured move of the distance of the widest part of the consolidation structure before it broke. So that would be a retracement from here to the high we made. And if you take that measured move off the low, a 200% retracement takes you to 46.34, which coincides really nice with that 618 and structural support. Further highlighting 46.22, 46.34 as key support for crude. Conwell, does that help? Near-term resistance at this point, I bring it back up to 47.72. Okay, it's basically those swing highs that you made back in September. Okay, 47.72, 47.72, right on. And that's also former lower median line parallel, should offer some resistance for the current or the former descending slope we just broke down of. And remember, these examples are something to keep in mind, guys. When a down or descending slope breaks to the downside, a lot of people will tend to downplay that. But in fact, those are typically the sharpest parts of the move. Same with the respect of a market that is trading in an upslope and it breaches the upside. Typically, that'll be the sharpest part of the rally. So you shouldn't have been too surprised early in the week here once we broke below that lower parallel to see the drop really start to precipitate and give you a little bit more momentum to the downside. Long story, key support down to 46.22. Conwell, talk to me. Does that make sense on crude? He says, yes, sir, right on. Pretty clean. The levels have been pretty clean. And obviously the crude headlines will continue to make their rounds. All we need to worry about, guys, is just what's going on in price action. You know, they can blame this on whatever they want at the end of the day. Um, you know, price action is what we're trading. Price action is what we're taking our mark off of, and that's what's going to continue to give us guidance. Hey, you're more than welcome, Conwell. As far as the other commodities, here's what silver and gold looks like. No real major thing I want to note here on gold, except the breakout that we were talking about, the potential yesterday, is materializing. So I do think this rally here can make it up to 1292, if not 1302, which would be the median line confluence here. And the former lows, 100% extension off the high. There's a lot lined up there. First things first, though, a basic 38.2 of the entire decline takes you into about 1292. And I think that's what you're on your way up into now. Let me add that here on the scalp chart. But for gold, you want to stay constructive near term. The immediate key support is back at 1272. Near-term resistance, 1292, 1302, both areas of interest for possible exhaustion on this rally here. For silver, it's even a little bit of an uglier picture, although I think that one's coming into a closer resistance level right now. And as we said yesterday, 1827 to 1843 is kind of where I'm looking for this thing to fizzle out. If it makes it through this, specifically 1843 on the upside, you know, I think you probably get right back into that 100-day moving average, the upper parallel, and that's right up here at 1890 or so. So keep this in mind. It's pretty strong rally, and not too surprising when you're looking at what's happening with the dollar index pulling off on both the indices, right? That dollar weakness inherently will tend to put a floor down on commodities, right, which are priced in dollars. So for gold, for silver, you're seeing this rally really start to get a little bit more legs as the dollar continues to fizzle. Gold, I think, has more upside potential. Silver coming in some near-term interesting resistance targets here as we speak. Conwell, questions on any of the commodities? Kelly, great to see you in the room. No, thank you, he says. You're welcome, Conwell. Kelly, where did I miss your comment, Kelly? Hello, pal. Did you mention if you are covering dollar CAD today? Thanks. Looking for it higher. Haven't traded dollar CAD in a while, but here's what I'm looking at, man. You know, I think I relayed my frustration to you guys last week on this trade, trying to play the pullback. We got an initial turn early last week, which looked kind of convincing. It just rebounded right back. Didn't really get any clear-cut short triggers here on the way up as we continue to struggle around 16 momentum. Look, things that look convincing. It looks like we made a break of the initial weekly opening range right here. This move takes us back below the sliding parallel, which has been governing, you know, some sort of pivot in price over the last couple of months. Momentum is finally in its lowest region, or its lowest levels that we've seen in nearly 3 weeks. Things are looking good for a near-term pullback. Do I have the guts to get into this thing? You know, you're far off from resistance already. You're, you know, almost 100 pips off, 80 pips off the high, so I can't really get into a short scalp from here. The whole point, Kelly, is I don't have a game plan. You know, it's one thing to know the directional bias of the market, guys. It's another thing to have a trade set up and a trade plan. And right now, well, I do think you're coming off on dollar CAD. I don't think positioning is there for us. I don't think we have a concrete stop to use. So in that region, or in that reason, Kelly, I don't really have a play per se on this. Look, I like 33.31 as near-term support, a basic 236. I do like seeing a drop into that lower parallel, former parallel resistance. But where you play that against, you know, I don't really have a setup. So I do like dollar CAD lower. Like I said, I don't have a trade set up for me that would be a conviction sort of play for me right now by any stretch of the imagination. You know, that would highlight sort of the same area we just looked at, maybe, but this is calling it way too early. Way too early. Kelly, does that make sense? I wish I had a little bit more conviction on this for you, but let's see how the month pans out. You're starting off at, you know, multi-month highs, so I'm not really going to get too excited about this reversal just yet. Kelly says, gotcha, LOL. Hey, you're more than welcome. Ned, or good morning to you, sir. Let me know if you have any questions there on your end. But those are the commodity block and crude. And the thing is this, the fact that crude is coming off, Kelly, is sort of also throwing me off on dollar CAD as well. Crude weakness typically is going to associate more with CAD weakness, which should be dollar CAD higher, or at least put a floor on this. So watch that correlation also heading deeper into the week. All right, any questions on crude, silver, gold, dollar CAD, euro yen, euro CAD, euro dollar, Kiwi Yen, Aussie Yen, or Aussie Dollar? I think I got all your questions here, guys. Okay. Michael says, seems like, the 225, Nikkei 225 seems like testing simple trendline resistance. Nikkei 225, let's see what it looks like. Well, it's been a while since I've looked at this, so bear with me. Oops. Okay. Here's what I would say at Nikkei 225, Mike. I see the trend line you're looking at. I assume you're looking at this trend line right here. It also happens to be an 88.6 retracement from the decline off the highs that you made back here in, what is that, April, down to the June lows. And Mike says, and the one from the V high? I think you have a typo in there. Sorry, from the November highs. So, yeah, so the November high one I have a little bit further off. So actually, the actual high ends up being December 1st. And if you take that with the December 18th high, it still gives you a little bit more range to the upside before you actually run into resistance. This is what I would be saying on this. Momentum is heading into 70, and the price is kind of struggling here below 1743. So I actually would be looking for some sort of setback towards 1713 as initial support, those former swing highs from September, but also a basic 786 and a swing low from back here on the 21st of last month. That might be an area of which you look for support for another spring higher. But near term, yeah, I think you're at resistance any way you look at it. And also, I just want to see what this looks like. It's going to get messy. Just bear with me. Yeah, look, see near-term support, even it continues to add right there again. Looks like a little bit of indecision. Might see some more sideways chop, but a dip into 1714 should be, or excuse me, 17,140 should be sort of your initial area of support. Thanks, Mike. Saved me here. Hey, you're more than welcome, Michael. Always good seeing the room, man. Michael, please, can you take a snap? Can I take a snapshot of crude? Sure. Sure. Which chart did you need? The daily or the intraday? Conwall. So here's your daily chart, brother. Feel free to take a snapshot of that. Okay, and your intraday looks like this. Got it? All right. Okay, guys, so if there are no other questions, I'm going to wrap it up here. I do want to apologize to everyone in the room. Again, I'm a little off kilter today because I'm on this new setup. So once I get everything all back into groove, we should be back on board tomorrow, a little bit more of a smoother sailing session. Again, keep in mind, guys, the first day of the FOMC policy decision. So that's going to be on tap tomorrow. BOE, NFP, still a big week of event risk. So keep that in mind as we open up November trade. As far as the dollar indices are concerned, again, keep your eye on that near-term upcoming support. Eileen says, no worries, new computers, geez, many thanks, have a good day. Same to you, Eileen. Again, because of the switch over here on Daily FX, we're going to have to sort of reset up everything and get back in the groove of things. But hopefully I'll have that all set up for you tomorrow. Guys, best of luck trading. Also, don't forget tomorrow at 1 p.m. Eastern, Jamie's midweek strategy webinar got pushed back because of the FOMC. So the midweek strategy webinar this week will actually be on the following day, Thursday. So quick update on some housekeeping there. Till then, guys, best of luck trading, and I'll see you all tomorrow morning. Cheers.